Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news central bankers seem positive, but investors have turned decidedly bearish. Today, Wall Street is sharply lower, down 1.7% in mid-afternoon New York time trade, and that is now a cumulative 3.8% loss over the past week, a 7.5% loss over the past month. Weak earnings from companies in international trade are pervading the market, and all the result of the self-inflicted trade wars. As reflected in today's Fed Beige Book surveys, it's the rising costs outlook what done it. In Shanghai yesterday, they closed flat. That cements a 2% gain over the past week, but marks a 6.5% loss over the past month. Actually, the NZX has lost 7.5% over the same time, and the ASX is down 5.8%. In the US, sales of new single-family homes fell to a near two-year low in September, down an eye-catching 13% year-on-year, and made worse because data for the prior 3 months was revised lower too. The latest indications that rising mortgage rates and higher prices are undercutting their housing market. To be fair, new homes are only a small portion of their housing market, but the existing home market is on a downer volume-wise as well. In Canada, and as expected, their central bank has raised interest rates 25 basis points to 1.75%, saying the resolution of the NAFTA deal and easing concerns over household debt gave them more confidence in Canada's economic outlook. At the same time, they've hinted that more frequent rises are in the future. The airline industry has updated its 20-year air travel forecast, predicting a compound annual growth rate of more than 3.5% to 8.2 billion travellers by 2037, a more than doubling of activity. Yes, China and India will grow as everyone expects, but the big gainer in growth is from Indonesia, expected to become the world's fourth largest air travel market. In Australia, APRA data shows that banks are having trouble making loans that meet the new tighter serviceability criteria. In fact, $19 billion of loans issued in 2018 have not met that standard. In a $1.1 trillion market, that's not a high proportion, but it does indicate that they move to meet the new standards of credit availability will be getting tighter there, which in turn will depress their housing market. The US Treasury 10-year yield will start today at 3.13% and another 2 basis points down from this time yesterday, with their 210 curve now under 27 basis points. The other yields we follow have moved similarly lower. Gold is at $1,227 an ounce and down $4 overnight. Oil prices have stayed down after yesterday's big drop, holding at a 6-week low. Today's US prices are just on $67 a barrel. The Brent benchmark is just over $76.50 a barrel. And the Kiwi dollar will start today a little weaker at 65.2 US cents. On the cross rates, we're at 92.3 Aussie cents and 57.3 euro cents. That leaves the TWI at 69.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.